Welcome back, guys. Welcome back to YouTube. We are going straight into the charts here on the S&P 500. Okay, I don't want to waste too much time today. We are diving straight into the charts, what you're here for. Okay, last time I did the video, we were over here. Okay, we were starting over here. And this it was the Monday. I did the video on the Monday on this candle, and I told you that I was expecting a sweep of this liquidity because that was a major pivot. We took it, we moved higher. I said we got a chance of moving higher after sweeping the liquidity under that low. That's exactly what happened, and we had monster 2 week rally, right? We got 1 2 3 4 5 6 7 8 9 green days in a row. Okay, that also triggered the Zweig, I don't even know how to pronounce this, Zweig breath trust indicator. Okay, that was triggered. That doesn't trigger a lot, guys, right? Since 1950, I think it's only triggered about 15 or 16 times. Only a handful of times it's triggered. It has triggered now on April the 24th. Okay, so it triggered, and the statistics are very alarming, guys, right? Very alarming statistics here. So 6 months later, 1 year later, every single time this has triggered, we have had 6 months later an average increase on the index of 16.35%. 1 year later, 23.78%. So very bullish every time. It's pretty much the start of a new bull market, because the statistics are very alarming. So very nice, very nice if you're a bull. However, that does not mean, the indicator, you have to take it with a pinch of salt because it's 6 months later, and within 6 months we could just do this, right, and then go back up and be, in 6 months time we could be higher. All right, so you have to take that with a pinch of salt. We could still move down and then back up, and technically we're still in 6 to 12 months time we are still higher than the April 24th, which was here. Okay, April 24th was here. So all we need to do is be higher than that for the indicator to, remain true. Okay, so we could still go down, come back up, and the picture is still the same. So right now, okay, we are sitting in a fantastic position because we bought stocks here. All right, at max fear, I cannot ignore an S&P 500 drop of 20%. Cannot do that. I am always a buyer. Okay, ignore the news, guys. Ignore all this crap about the dollar's in trouble. The U.S. exceptionalism is in doubt. I don't believe on any of those things. Okay, I still believe it's going to be more of the same for at least another decade. Okay, I don't know what will happen after that, but I am of the opinion that US market will still be the dominant market. The dollar will still be the dominant currency, and much of the same. I am investing still in the US stock market. I'm not investing anywhere else, and I'm happy with my decision. All right, you can obviously do whatever you want. It's not financial advice, but for me, I am doing what I know best, and that is investing in market crashes. Okay, market crashes, I take full advantage of market crashes. And right now, I told you I expected a move back towards this 200-day moving average. If we pull a fib as well, we're right within the golden pocket zone. So major resistance. We've also filled the S&P 500 gap here as well. Okay, so that has now been filled. We're also at the the Liberation Day high on the S&P 500. So yeah, a lot of resistance here I'm expecting. So I am hedging here, guys. Okay, when at market open, we're about an hour and a half away from market open. I will be hedging my portfolio with put options, or I'll be selling calls against my shares. If you want access to what I'm doing, link is in the description. Come and join. It's absolutely free. Doesn't cost a single penny. Okay, but I'm a hedging now. Okay, this is the type of position you want to be in. As a somebody who's managing risk, it's always prudent to hedge buy insurance against your shares at major resistance levels, and that's exactly what I'm doing. I'm doing my job here, right, guys? This is major resistance. I'm also expecting volatility this week. We have PMIs today. Okay, we have PMIs. We also have ISM tomorrow. We've got not much tomorrow, but on Wednesday, as you're probably already aware, we have the FOMC. All right, so I'm not expecting Powell to cut rates. I'm not expecting Jay Powell to cut rates. Okay, very stubborn Fed at the moment. A little bit of a political battle between him and Trump. We discussed that before. So I'm not expecting rate cuts, especially with the strong jobs number that we got last week. And they will still obviously use tariffs as an excuse not to cut. They should be cutting. Even Scott Bessent is now on the bandwagon, saying that we should be cutting rates. That guy is very macro talented. So if he's on board, I think Fed should do their job and cut rates, but they're not going to do it. I don't even know if they're going to do it in June, guys. I don't even know. They're so stubborn at the moment. I really don't know Jay Powell's game. Okay. I think we've got a chance of creating a mess here in regards to a recession. A recession is a very likely outcome. We've already had the first negative quarter GDP. The next one could also be negative. However, the chances of that is pretty slim, I would say, because of all the front running of the tariffs. People are panicking. They want cheap prices. They're probably people are, with sheeps, right, guys? A lot of people are sheeps. They're probably running to the stores right now, trying to take advantage of the prices before the hikes, things like that. So I expect a pretty positive second quarter print, and then maybe towards the end of the next two quarters, we could get some really bad slowing of the economy, and inflation might even. I think inflation, to be honest with you, will tick up in this quarter because obviously people are probably rushing to the counters to try and pick up cheap goods right now. Okay, they're probably stockpiling in anticipation of Trump tariffs. So I expect maybe a stagflationary type of environment in this second quarter. Not stagflationary. What I would expect is maybe we get Q3, Q4 is my concern. I don't think this quarter will be negative in terms of GDP, but I can see a scenario where inflation starts ticking up again. So that obviously will give the Fed another excuse not to cut rates. So they're being stubborn. I don't know when they're going to cut rates. I don't expect them to cut rates in the May meeting. That's the likelihood of that. We've seen that in the futures, Fed funds futures prediction that we're not gonna. The likelihood of Fed cutting is like less than 1%. So I don't expect a May cut, but what I'm looking at is what Powell is going to say going further. I don't think you're going to get much from him, especially in terms of the battle between him and Trump. He's going to just par it off, and I think with the QT they're going to have to obviously come to an end with QT maybe in June, because they're going to have to finance some of that debt that the US needs to roll. So I think QT might be coming to an end, but I don't really know about rate cuts. Does it really matter? I'm not 100% sure, because I think what matters the most is the money printer, rather than the cuts themselves. The cuts is more political. You look like a good man. If you're cutting rates for the average people, okay, you're making debt cheaper. People's payments are cheaper. Everything is cheaper. Cheap credit. So you're looking like the good old politician that you were elected for. So that's more of a political thing. Obviously, it makes your mortgage cheaper and things like that, no doubt about it. But I think what really moves market is the liquidity and the money printing. And I'm looking more for any guidance around quantitative tightening ending. Quantitative tightening ending is gonna be the driver that's gonna send this market to all-time highs. But I am exercising caution here. We've got the FOMC, we've got a lot of economic data this week. We could, the market's at the mercy of the tariff news at the moment. Do I think tariff news is going to be able to bring this market down to take out these lows? I don't think so, unless you get a headline that says China and US are unable to come to a deal. All right, so what I think is going to happen is I do think this gap is going to be filled here, guys. Okay, maybe it happens this week, next week, but even if we move up, or maybe we don't even reach that level and start coming down towards this this gap fill, and then maybe we move higher, okay, we will have to assess the market, the narrative, everything like that when we get down here. But I do think the market will drop down to this this gap fill on the S&P 500. So that is what I am expecting going forward. I am going to be buying my protection, my hedging a portfolio. You want to be in that position. I am in a wonderful position in this market right now. I'll be buying my insurance here. Okay, if we drop down, we take out these lows, I'll buy again, right? So that's what you want to be doing. You don't want to be missing such opportunities. But if you missed your opportunity to buy here, I wouldn't be chasing this market, because I can expect a pullback. All right, if you want to buy this market, okay, you haven't bought here, I mean, you got another opportunity when I made this video. And if you haven't taken advantage, then at least wait for a pullback into this zone before going long. All right, so that's what I would do if I've missed out. I'm day trading every single day. The ES futures, the Nasdaq futures, we can see we've already opened quite negatively today, but Monday is generally a pretty negative day. Last time I made this video, we were here as well, and then we reversed for the remainder of the week. So that could happen again. We could, come down, and then as New York opens and Tuesday, Wednesday, we could start rallying. And I have found that before FOMC, generally we do see a little bit of flush on Mondays, and then Tuesdays and Wednesdays the market starts to recover and we move higher. But it's obviously going to be dependent on what Jay Powell says going forward in regards to quantitative tightening and quantitative tightening ending, and also the rate cuts. So a lot to look forward to this week. I hope that I have helped you navigate the market pretty efficiently, since I told you that the likelihood of being in a bear market was very high. At that time, I was expecting a bear market. So we have played this market really, really nicely. So I hope that I have provided some value to you guys. I've protected some of you guys from, making really bad financial decisions in regards to this market. I hope some of you bought the stocks with me when we were here. Okay. I mean, I'm sure you would have if you were in part of the Discord. But if you're not, link in the description. Take advantage. If you want to learn how to day trade, link in the description. Come and be a part. We also have some courses on the website that you can take advantage of if you want to learn how to day trade. You want to come into the group, you want to ask questions, I am gladly willing to help answer any questions in regards to how to become a day trader, strategies, anything that you need assistance with in regards to day trading. We are there. We have a great community, so you should come and check it out if you want to learn how to do this full time. Anyways, guys, that's it for this video. Stay safe out there. Thank you for watching. Goodbye.